Good morning, and welcome. Welcome one and all to today's session with ERS, where we're looking to help you and your clients keep business moving in 2023. This is one of our sessions today, and it's our motor fleet product pit stop, and we'd like to welcome you today on Tuesday the 14th of February. For those of you who may have forgot, yes, it is Valentine's Day, so there's still some time to jump down to that local petrol station and grab a bunch of very expensive flowers. Again, we'd like to thank you for coming along. This is, as I said, one of 5 or 6 sessions where we're hosting throughout the month of February, and we do think you'll find this informative and useful today, covering all things to do with our fleet products at ERS. We will make it quite insightful, and we'll also make it interactive just to keep you on attention. We'll also have a poll throughout the session. We are going to put the cameras off and also the microphones at your end, just to keep the bandwidth going, and purely just for interaction purposes and to keep your attention, we would please advise and request that you keep all applications off on your laptop. And again, that just helps with the system and obviously the message coming across this morning. We will record the session and we will post this on our ERS.com along with our other webinars, just in case you do have or you have missed any of those through the month of February. As I said, today we're going to cover fleet, and we've got 2 of our best underwriters at ERS to cover this product for us. We will have a chat and a question box at the side, so if you do have any questions that you'd like to ask the underwriters or ERS, feel free to add them either during the session or towards the end, and we'll bring those up. Those will all be visible to myself, and we'll read them out as we're going along through the session this morning. As I said, I'm Andy Ward. I look after the Regional Development Manager session in Scotland and Northern Ireland, and some of the brokers in North England as well. Today we're also going to welcome along Tommy Acott, who's down in London, one of our senior underwriters in fleet. Many of you know Tommy. He's been with ERS quite a few years, and more locally, a good friend of mine, Stuart Bowles, who's our regional trading underwriter in Scotland and Northern Ireland as well, is going to host a session with you this morning. Behind the scenes, we do have a, let's call it a little chauffeur, which is Claire, our guardian angel, and she's conducting the session this morning. So thanks, Claire, for pulling this together and for inviting along. At this count, I can see over 120 brokers, so fantastic session this morning. So without further ado, I'm going to pass on to Tommy. We have had a bit of an idea at the market at the moment. There's a bit of a change coming. Those of you who have been in the industry long enough will know that in the past there has been fluctuations with soft markets and hard, and it's no surprise that we're obviously starting to go into, if not already seen, a hard market. So Tommy's going to cover off the fleet product this morning and give me some insights on what ERS are looking to do and our view for 2023. Over to you, Tommy.
Great, thanks Andy, and thanks all for joining us today. As Andy mentioned, I'm Tommy and I'm a senior underwriter in the fleet team. So in terms of market insights, what have we been seeing? Since the start of the pandemic, the motor industry has had to continuously adapt to changing circumstances, unexpected disruption and external pressures that still persist to this day. But what we've been seeing lately is that road usage has returned to pre-pandemic levels, and accidents have also returned to pre-COVID levels. There has also been a slight reduction in the number of incidents during peak rush hour, which is potentially reflecting the shift in office hours in the new flexible working world. Inflation in the UK has been a real issue for everyone, and we too have been impacted in the motor insurance industry, with it significantly affecting the cost of servicing claims. While inflation in the UK overall has hit around 11%, the percentage increase varies within the specific elements of claim servicing. For example, windscreen costs are up 12%, repair costs 9%, care costs 20%, and the cost of car parts and paint are up 14% and 15% respectively. There are a number of factors that have contributed to these rising costs: energy prices, manufacturing capacity, and increased operating expenses, to name a few. There have also been labour shortages as a result of the pandemic, with many body shop technicians taking early retirement or leaving the market, and this has resulted in increased wage inflation. Energy costs and expensive shipping have increased the costs of manufacture and delivery of parts, and naturally garages are looking to pass on their rising costs. In addition to this, hire charges have also increased as claimants need longer rental periods, with repairs delays resulting from supply chain issues. With new cars in short supply, fleet owners looking to grow their fleets or replace older models may face challenges in this area. The global shortage of semiconductor chips has impacted the availability of new vehicles and has increased the price and popularity of second-hand vehicles. Second-hand car prices have increased by around 30% due to shortage of new cars. And while car production has increased in the last quarter of 2022, it remains a third lower than pre-pandemic levels. Light commercial vehicle production also fell by 18% in October 2022. fleet owners will also be mindful of the need to prepare for the government's 2030 new petrol and diesel car sales ban. And we're starting to see the steady introduction of electric vehicles into existing fleets. One area that's a great example of this is the traditional director-owned Range Rover is now being replaced by a Tesla. Electric vehicles can offer savings to fleet owners looking to curb their rising operational costs. So we're anticipating growing demand for mixed fleet policies covering petrol, diesel, hybrid, and electric vehicles. Insurance premiums are increasing in all areas in response to inflation and vehicle usage returning to pre-pandemic levels. We saw many insurers drive rates down aggressively during the pandemic. This was a short-term view of collision and claims data, which was not sustainable once road usage began to rise again. We're now seeing less and less flexibility from some of these markets, with some pushing up to 20% of rate on clean business. As a result of this long period of COVID fuel price drops, price correction is expected to continue into 2023 and potentially 2024. According to recent data from EY, the average combined operating ratio, or COR, for UK motor market is expected to reach 115% in 2022 and 114% in 2023. So their view is that in 2023, for every pound an insurer receives in premium, they will expect to pay £1.14 out in claims, expenses, and commissions, making many motor insurers very unprofitable. And what does that lead to? Increased premiums. So before we move to the next slide, we have a poll for you, which Andy will run through now.
Yep, thanks, Tommy. So we're looking for a bit of feedback here, a bit of interaction. Given the current market conditions, and we all know how difficult they are, what type of increases are being applied to fleet are you preferring your clients for? So what's your view on the increases you're seeing on fleet cases and the discussions you're having with your clients? So anywhere between 0 and 5% at renewal, 5 and 10, 10 and 15%, 15 and 20, or are you seeing, and we have in some cases, as much as 20+% increases on rates, and the discussion you're having with your clients? So just give a couple of seconds just for the poll there and the interaction. There we are. Thank you, Claire, just for pulling that through, and thank you for your input. In fact, that's almost exactly on par what we're seeing. We are seeing anywhere between 10 and 15% on a lot of the renewal cases coming out, and indeed even on clean cases and well-run risks. Interesting to see the size as much as 20%. I'm sure some of the fleet underwriters would maybe comment that at the end of the session. So thanks for that. Back to Tommy.
I think we might have one more poll to go through as well.
We do. So what percentage of your fleet insurance carriers are asking for rate increases at renewal? So actually with your panel, having a view of your actual insurance panel at the moment, what percentage of your panel are looking for increases at renewal? It could be as much as every single one of them, up to 25%, 25 to 50, 50 to 75, or as it says, almost all your panel are looking for increased on renewal rates on their fleet. And again, we'll just take a couple of seconds for our wizard behind the screen just to pull the details together. There we are. Thanks for that, Claire. And again, no surprises. The reason we have hosted this session today is we are hearing this as well from our partner brokers. We are the UK's largest motor-only, broker-only motor insurer. And obviously this is something we feel very, very early on in the new year, that most panel members are putting rates up for brokers and their clients. So it's interesting to see as much as 50 to 75% there, but even more of a shock, 75 to 100%. Of insurers are putting rate increases up there. So a challenging time for you as a broker, I'm sure, challenging time for your client, and hopefully what we can do is offer a solution here at ERS. So thanks for that. Over to you, Tommy.
Great, thanks for that, Andy, and thanks to everyone who voted there. So, so why should you use us for fleet? Risk appetite, well, it's pretty broad. We tend to cover the majority of occupations, and we've shaped it around what we're good at writing. So there are a few things that we'll try and avoid, but we'll always have a good reason why. Direct access to a team of experienced underwriters. We have 24, I think, underwriters in the team, and we've grown to ensure we meet the needs of our brokers and customers. We trade through 3 distribution channels. So we've got our retail team based in London and Swansea, which covers brokers in England and Wales. In Scotland, we've got our regional expert, who you will be hearing from shortly, and he covers the Scottish and Northern Ireland market. And for the London market, we've got a separate team who focus on the wholesale and national brokers. We don't use portals in the fleet team. I know a lot of the market have chosen to go down this route, but we like to trade and build relationships with our brokers, and that is why there's always an underwriter available to discuss every risk. And to support our underwriters, we have a team of experienced underwriting technicians who manage our policies between renewal dates. We have a close working relationship with this team, and they're responsible for dealing with the everyday queries like driver and vehicle referrals, and also handling declarations throughout the year. So onto our risk appetite, own goods and trades. So this is the largest proposition in our fleet portfolio, and it's also where we see the most competition in the market. We will consider risks ranging from 5 vehicles upwards with no upper limit. We cater for all vehicle types and combinations under this proposition. So from your everyday car and van to HGVs, minibuses, forklift trucks, cranes and diggers, and every combination can be considered. We've got a broad risk appetite covering the majority of businesses, ranging from the small family-run business up to large corporate organisations. In terms of what we like, risks that don't have many claims in the first point, who doesn't? Minimal exposure to younger drivers, although we can cater for those with younger drivers, and risks with a real positive and proactive approach to risk management, which we'll cover later on. What we don't like is things we've tried before and it becomes impossible to price. So we avoid NCD rated new ventures as well as smaller risks below 5 vehicles. Onto bus, coach and minibus. So this is an area where we have a lot of experience within the team, and we're one of a few markets that will look at this type of business. School contracts and charity work is something that we target as they tend to perform better and have less on the road exposure when compared to express and tour work, for example. We will also write private and contract hire, as well as some stage routes outside of city centres. And again, with our own goods and trades products, what we like and don't like in terms of risk features, it hasn't changed. It's the same across most of it. Onto taxi. So taxi is similar to bus, coach and minibus in terms of the contracts that we like. The types of fleets we will see range between your small rural operators to citywide businesses, and we'll consider all of these. Typically, the taxi market is extremely competitive, and there are lots of markets that write in this area. And taxi drivers, who you probably know, are notorious for trying to get the best deal. Onto goods for hire and reward. So we exited the general haulage and courier market in 2017 because we couldn't make it work for us. Our appetite in this segment remains limited, but there are areas that we'll still look to write, which are the more specialist hauliers involved in the carriage of hazardous or abnormal loads. The minimum gross vehicle weight is 80 tonnes, which is probably what you would expect for the type of goods that are generally carried. So that's anything from wind turbines, large boats, to big pieces of plant machinery and that sort of thing. Here, the cases we will consider need to be performing well, and again, have a really positive approach to vehicle and driver risk management. Onto self-drive hire. So this is a specialist area in which ERS have a market-leading proposition. We've got a team of 4 experienced self-drive underwriters who look at this type of business. We can consider risks from established self-drive operators who have a minimum of 15 vehicles. We will avoid city centre risks and those with exposure to prestige and performance vehicles. And due to the nature of the industry, we underwrite to a strict risk appetite and ensure each operator has a robust driver validation process in place when agreeing to hire the vehicle to the customer. And the reason we do this is because the broker and the client are essentially doing our underwriting for us by selecting who to hire to and who to decline. So that was a brief tour of what we have to offer in our propositions. The majority of business we tend to see will be your everyday conventional fleets, but we also have an appetite to write non-conventional fleets. If you have any questions on anything I've touched on this morning, please pop them in the chat or raise them at the end and we'll happily cover them off. And I'll now pass over to Stuart, who'll talk through the underwriting and pricing of risk. Thank you.
Thanks, Tommy, and good morning, everyone. So let's take a look at how we at ERS underwrite and price our risks. There are 3 key parts to this process: the exposure, the claims experience, and pricing. So let's take a look at the exposure first of all. This is where we, as underwriters, try to fully understand the physical risk that's being presented to us. We look just as you would when exploring a new customer to try and understand all the key features of that customer's business which are relevant to the operation of the fleet. We have fact finds available for all our products, and they generally help gather all the information required to understand the insured's operation. They're available on our website or by contacting any of the underwriters or RDMs. And we look at things like the insured's trade, what do they do and how do they do it, and how does this translate into the use of the vehicles. We also consider the location, where are they based, and the area of their operation. We also look at the cover requirements, who are we insuring, the level of cover, and what use is required. Then there's the different vehicle details themselves, the different types, values, any modifications to consider, the age of the fleet, and potentially overnight postcodes are all pieces of information which can help us understand our exposure. We also consider the driver information, such as the age and the profile of the drivers, and the driver turnover, how steady has the workforce been. This doesn't mean that we will restrict cover, but it helps us to understand the profile of the business. And understanding these key areas is even more pertinent in a post-pandemic world, where businesses had to adapt to ever-changing circumstances and rules in order to operate. And while some changes were temporary, others were permanent. And it's key for us to understand how that business will operate going forward and how that differs from the past exposure. And as Tommy has already mentioned, another key area for the exposure is risk management. And a positive approach to risk management can often be seen in the culture and ultimately in the claims experience for that business. And there are two areas of focus for risk management. The first is technology-led solutions. This includes things like cameras such as dash cams, rear view cameras, and in some cases in-cab cameras focusing on the driver, or telematics that provide real-time data and a score for the driver, or vehicle tracking. However, these can be expensive solutions and not always within the reach of every business or even required. However, where appropriate, we can consider contributing to the installation costs of such solutions if they're installed within 30 days and the appropriate receipts are provided. In such cases, we would expect to see an improvement in claims performance, which would be reflected in future renewal rates. But the second area is non-technology-led solutions, and these can often produce just as good a result in terms of the claims experience as the technology-led. At ERS, we can suggest suitable solutions such as regular licence checks for all drivers, handbooks issued with clear guidelines on how drivers should behave, their responsibilities, and what to do in the event of an accident, or regular driver training, or assessments, or claims reviews, or even things such as penalties like paying the excess for drivers who have had fault claims. But we can also consider risk management bursaries as an alternative to specific solutions. These generally take the form of a return premium given at the renewal once the risk management solutions have had time to impact the risk. Next slide, please, Claire. And the second element is the claims experience. This is where we look at how the risk is performed over a period of time. From the claims experience, we can establish the frequency, severity, and average claims cost per vehicle for the risk. We look for a 3-year confirmed experience as a minimum, however a 5 would be preferable. And we look for any runoffs to be up to date to help establish the true frequency and average claims cost for that risk. In addition to the confirmed claims experience, a claims listing is also very useful for us to carry out a deep dive in the risk. It helps us to understand the types of claims the insured is having, if there are any issues with things like first notification, and it also helps us to understand the true frequency of the claims by adjusting the experience for any windscreen and nil claims. But what it doesn't do is give us the full narrative. And this is where, as brokers, you can help our understanding of the experience by giving as much information as possible, particularly around large losses or drivers who have had multiple claims, sudden changes in the experience either on frequency or around a sharp increase or decrease in vehicle numbers. And of course, critical to the management of claims is the first notification of a loss. A claim logged out with a 24 or 48 hour period can on average add between £600 to £900 onto the cost of the relevant components of that claim, such as an increase in own damage costs, or third-party repair costs where we as the insurer are not in control of managing those repairs, and of course third-party credit hire. And at ERS we understand the importance of the first notification. That's why our claims lines are open 24 hours a day, 7 days a week, 365 days a year, to allow the insured, the driver, transport manager or you as a broker to register that claim as quickly as possible. And in addition to this, we also offer driver assistance packs. These packs can be kept in the vehicles and contain all the advice and all the relevant information that a driver needs to obtain following an accident. It also includes handy third-party cards for swapping insurance details and windscreen stickers. Now, these packs are free to download from our website, and they can either be issued to yourselves as brokers for distribution or sent directly to the insured. Next slide, please, Claire. And the final element then is pricing. So both the exposure and the claims experience are blended together to produce the risk premium. This is where we as underwriters try to predict how the risk will perform in the future based on what we know and the past experience. Now, this portion of the overall premium is the largest. It accounts for around 60%, and it's where you as brokers can have the most influence by providing as much information as possible. In addition to the risk premium, we also have to include our fixed costs and expenses, such as reinsurance. Motor insurance carries an unlimited liability for third-party injury, and therefore it's prudent for us as an insurer to reinsure a portion of that elsewhere. We also have to contribute towards the MID levy, and every risk has to contribute towards a large loss fund. We then have our operating expenses to be included. Then we have to consider any commission that forms part of the contract, and finally the underwriting profit. And the motor fleet market in general struggles to turn an underwriting profit. And with the limited returns in the investment markets and the increases that Tommy's spoken about already, like claims inflation and fixed costs such as reinsurance, rate increases are beginning to be applied by most insurers on their motor book to correct previous years of underfunding. And we expect these increases to continue throughout 2023. It's therefore key for you as brokers and for your clients to partner with an insurer like ERS who take the time to understand every aspect of your client's fleet risk in order to provide a more tailored and sustainable rate for your clients. And that's a quick summary of how we at ERS underwrite and price our fleet risks. I'll now pass you back to Andy.
Thank you very much, Stuart. Yeah, I'm a big believer in prevention is better than cure, and obviously today our underwriters covering the products themselves, the appetite, a bit of a view in our view on the reinsurance costs and the underwriting and pricing of a risk. Hopefully gives you an idea that there is challenges out there, but we're obviously in this journey together as insurer and broker. Before I go into a couple of more slides here before we finish, we do have the questions at the end. So if you do have any questions for our fleet underwriters, just pop them in the chat. It should be at the top right hand side of your screen. We do offer a product, just to finish off, on breakdown cover, which can accompany and put alongside your fleet product. We offer a 30% discount for any fleet over 10 vehicles on our breakdown policy, and this can cover anything from standard car, motorcycles, minibuses. You can see the list there, horse boxes, taxis included. Very, very competitive rates, the feedback that we get, and every broker on this call should be able to have access to this on your eTrade portal. If you're looking for access to eTrade, it's nice and easy at ers.com, or reach out to your RDM. We also do offer a bordereau solution for this. If you are dealing in breakdown cover on mass volume, we can also accommodate that. So again, reach out to us. It's something that can complement your fleet product as a broker. Next slide there, Claire, is just to remind you, first of all, thanks for joining today, but we do have a few other sessions. I can see in the chat there's a few people actually from the agricultural world on this session. It may be good as well if you'd like to join the farm webinar, which happens today at 11:30, covering all things agricultural. Personal motor on eTrade has a session later on tomorrow at 10 o'clock, and that's actually covering some new products we're bringing to the market on our eTrade portal, where you can write high net worth and prestige, something that's very, very topical at the moment given what we're hearing in some other markets. So that's there, you can sign up for that. And the last but not least is our eTrade ERS demonstration. So if you haven't used our eTrade portal before, we are hosting a webinar on Thursday at 10 o'clock where you'll be taken through the start to finish on our eTrade product. suite, as well as how to use the system. So don't miss our upcoming webinars. You can always stay connected with ERS at ERS.com. We also recommend that you look and follow us on obviously social media channels and sign up to our newsletter as well. We will record the session today and we'll put it on ERS.com. So if you do have any other members of your team or any account execs within your brokerage you feel would value today's session and listen to the underwriters, feel free to download that video and they can catch up the 25 minutes from the underwriters there. So just by wrapping up, we'll just bring the boys back in for a couple of questions that are coming on. Now, one that I believe Tommy covered off, so quite topical. Tommy, probably one for yourself. Self-drive hire, great to hear we offer this product now open market. Is there a mailbox specific for this product?
It's probably just the normal sort of fleet quotes inbox. What we do have is specialist self-drive fact finders, which I think we could potentially put somewhere in the sort of chat box or document downloads at the end of this. Equally, reach out to your regional development manager. But yeah, just the normal inbox, and then it'll be picked up by one of the self-drive underwriters and kind of take it from there.
Perfect. Okay, we've got a question here around haulers. What is your view to underwriting general haulers and couriers? Maybe one for yourself again, Tommy.
Yeah. So we covered that off just in our part there. And we used to do it. It didn't work out for us. So the general side of it is something that we've moved out of, and that's why we only really look at the specialist areas. With convoy sort of vehicles as well. Just because it's a very competitive space. I say we tried for a number of years and we just couldn't make it work for us. So the general side, unfortunately, isn't something we would look at again.
Okay, and there's one here from Helen. Thanks, Helen. Relating to breakdown, is there an age limit on the vehicles that will cover on the breakdown cover? Helen, I'll take that away, but I don't believe there is. We at ERS, we insure vehicles, up to 95, 100 years old. We've got vehicles in the books. I don't think there's any restriction on the age of the vehicle for breakdown. These are all priced accordingly, depending on the type of vehicle and the age of the vehicle. So if you're a taxi, for example, it would be a higher premium. An older vehicle, possibly a higher premium. So again, it's all down to usage. So we'll get that answered for you, but I don't believe there is. Stuart, one for yourself. Will we cover a coach risk going into Europe?
Yeah, so our policy automatically extends to provide full cover in EU countries. So yeah, quite happily to consider that. Obviously, one of the things we consider is the length of time that they're spending in Europe and how often they're travelling there, and the risk will be rated accordingly. But yeah, no issues with coaches going to the EU.
Perfect, thank you. And looks like one of the last ones then, unless there's any coming in the last minute here. Tommy, will we cover 100% electric vehicles? Some insurers are declining this.
I mean, I've never seen one, if I'm honest. I think we'd have a look at it, absolutely. But what I'd say about electric vehicles is, they tend to cost more to repair. So we would charge and term them appropriately. But yeah, we'd certainly have a look at them. But I say, I have not seen one yet. I don't know if Stuart has either.
No.
Not yet. I'm sure they'll come. Well, that looks to be the last of the questions coming from the attendees there. So just finally, again, just to say thank you very much for joining us this morning. As I said, this will be recorded and put on our Stay Connected webinar page. And thank you again. We'll see you next time.
Thanks all.
Thank you.